In this video, I want to talk about the possibility of an upcoming stock market collapse. If it will happen, when it will happen, how deep it will be, and what to do about it. If you're new to my channel, my name is Jared Ayers. I'm a CFA charter holder. I've been managing my own money for over 20 years and have created this little channel to share my insights, strategies, and techniques that I use to navigate the markets and the investment environment at large, especially during these tough times. So I hope you enjoy. So to answer the first question, will there actually be a stock market collapse? The simple answer is I don't know. I've never seen before a period in history, looking back over centuries really, where there's been unprecedented, uncapped printing of money. And that's not just from the Fed, that's from virtually every major central bank out there right now. In response to, probably one of the worst economic crises we've ever seen globally. As long as the Fed and the central banks have the tab at the bar and the credit card doesn't max out, the party will continue, as they say, with the money printing, with the bond buying. That keeps bond yields low, interest rates low, and asset prices, that being stocks and bonds, high. One of the key indicators I am watching very carefully is the yield on the US 10-year. My own hypothesis is that if that yield begins to creep up and if it gets past about 2.5%, I'm not sure there's going to be enough money printing out there. I don't think the Fed or anyone else is going to be able to print money fast enough to swallow up the amount of debt that needs to be issued. And what will then happen is that I think bond prices will begin to fall. If bond prices fall far enough, fast enough, then that will create a domino effect and take down the stock market. So, a key to whether or not there's going to be a stock market collapse is the bond market. That's always been the case. If you want to know what happens in the stock market, watch the bond market. So that's what I'm doing right now, and quite frankly, until we get a little bit further down the road, I can't truthfully answer this question. I think it's going to be, this is an unprecedented time in history, and it's crazy to watch, but I'm waiting to see what happens. So to answer the second question on when a possible stock market collapse might occur, again, I don't know. I've never seen a time when there's as many economic indicators showing such negative points of data than I've seen right now. I've also never seen unlimited quantitative easing in the way that we're seeing it right now. I've never really been able to predict anything with any kind of accuracy, and have just withdrawn myself from trying to do that. What I do is look at data and see what that data is telling me, and in turn I prepare my portfolio for what the data is telling me. That's really all I can do right now, is decide when or if I believe that it could happen, set myself up so that the timing of when it might happen is virtually irrelevant. So that's really what I have to do. Is it going to be May? Is it going to be June? Is it going to be 2020? Is it going to be 2021? I have no idea. And from my experience, I've never met somebody who can predict an event, and the timing of that event. So if somebody out there believes they have the magic crystal ball and are saying, it's going to be May 2020 or June 2020, it may happen. But that's not going to be, there's nothing they have that's actually going to be able to predict that. There is a fight going on right now in the background between the central banks and the economy, and I don't know who's going to win. So again, the best thing to do is to be prepared for if it happens and be agnostic to the timing of that event. So of course the third question on this list is, how deep might this upcoming stock market collapse be? Again, I have no idea. 2008 was just about a 50% cut from peak to trough in the S&P 500. This economic scenario makes 2008 looks like child's play, basically. I don't know If this is going to happen, I don't know when, and if it does happen, I don't know where the bottom is. Some people are saying 60%, 70%, 80%. That would be devastating, of course, but I have no idea how deep it will be. What the central banks are basically doing is turning this into a tug of war with the economy. And as we've all seen at family picnics or corporate gatherings or whatever, tug of wars can result in surprise outcomes. I mean, sometimes you'll see one side pulling ahead, inching, and then all of a sudden the other side will pull back and win the whole thing, and the side you thought was going to win actually ends up collapsing. So I don't know. Like I said, unprecedented times, unprecedented measures, and who wins, I can't tell you. If the economy wins and the central banks aren't able to pull the economy out of its hole, I don't know how far it can go, basically. So again, all I can do is prepare for the event, so that if it does occur, I'm okay, or even maybe slightly ahead, and that's all you can really do. And if it doesn't happen, then you also have to prepare for that as well. How is your portfolio going to look? How is it going to be structured, and kind of where do you go from there? So yeah, it's a tough call. So the final question I'm going to try to answer in this video, of course, is, okay, so what do I do about it? Well, I don't know what you should do about it. Obviously, each individual is going to have to evaluate their own situation. As for me, like I said, I want to make sure that I'm prepared in case the worst case scenario does occur, but protect myself if it doesn't. So in case you couldn't tell, I mean, my hypothesis, given where we're at right now, is that the economy is going to win over all the stimulus and money printing. I think that can help, and I think it can go so far. I don't know, given the shock to the global economy, that it's going to be enough. I think currency devaluations and those types of things are going to become a reality. I don't think that you can print that much money and not have consequences. Certainly debt on top of debt on top of debt has never really been a great solution to debt. So that's, I think, what we're facing right now. In terms of a portfolio, my portfolio, how I'm looking at it, I think you have to look at it from an asset allocation standpoint. Which asset classes do you think are going to fare the best given the times we're in? So for me, I'm making sure that I have lots of cash on hand. I think there's going to be a fantastic opportunity down the road here, and I want my powder dry. I have a lot of gold right now, and I'm going to continue to hold gold. I believe with all the money printing, currency devaluations, I think gold is only going to go up as a real asset, with a limited quantity and a historic store of value. I think that's not going to be a mistake at this stage. So have been adding on weakness. At the same time, given that I can't predict the future and I don't know what's going to happen, and I can't say for sure whether the money printing and other quantitative easing measures, bond buying, etc. is going to work, I have held my stocks. They've continued to recover, making sure that the stocks I hold are those that are in the best position to recover, so not holding anything to do with oil. Despite what people believe about the recovery of oil, etc., I think those companies are very on their heels a little bit, certainly in North America. But companies that have really, really solid balance sheets, low debt, high cash flows, are poised to do very well because they have limited fixed capital requirements. Those are the companies I am holding. I do, of course, have hedges on because, again, my hypothesis is that the economy will ultimately win. Those hedges are basically a form of insurance. If those hedges have to perform, then they will more than offset any losses in the stock portion of my portfolio. So again, I'm exposing myself to upside, keeping a lot of powder dry, making sure that I'm not exposed to massive currency devaluations, and basically making sure that that's how I'm sitting. I have no interest in holding bonds right now. I think that opportunity has passed with the depression of interest rates. I think the only place for bonds to go is down. So not really interested in holding those at all. Also, if we're going to enter into an inflationary environment here after we get through this deflationary time, bonds are not something you want to hold either. So that's my thoughts on what's coming, what's ahead of us, and how I'm positioning myself. Not trying to be a hero, just trying not to lose. That's how I've always approached investing, and that's how I've always been able to be actually quite successful in my investing career. So I do hope that was useful for you, and I do wish you the best as we navigate through these tough times. So I do hope you found that video useful. Again, not a lot of certainty ahead of us. I think the best way forward is to ensure that no matter what happens, you're going to be okay. That's certainly been my approach. Not trying to swing for the fences right now, just trying to make sure that my exposure matches kind of the possibilities of what might be ahead of us. So again, hopefully you got something out of that. If you did like the video, do please give me a thumbs up, hit the like button. If you're new to my channel and you have not yet subscribed but you want to see similar content, by all means hit the subscribe button. And if you have any comments, questions, or anything else you want to add in the comment section, please go ahead and do so. I do love to get feedback from anyone watching. So until next time, stay safe, stay healthy, and thank you very much for watching.